Sunnova Energy is a leading residential solar company. Solar has come a long way over the past decade, and it's now a financially viable option for many homeowners. In 2020 and 2021, I actually sold residential solar panel systems, so I am familiar with this industry. Let's take a closer look at Sunnova. The primary purpose for going solar is to greatly reduce or eliminate your traditional power bill. The vast majority of people who end up going solar finance their systems, many of whom are able to owe less each month on their solar panels than they previously paid to the power company. Tax credits and favorable financing terms make all of this possible. For a residential solar company, some of these numbers on this first slide may look impressive, but there's a lot more to it than meets the eye. For starters, these are non-GAAP figures. I understand the purpose of tracking non-GAAP numbers, but I think this company is a special case. It's going to take quite some time before they're able to produce impressive GAAP financial results. Also, what good is EBITDA for this company? Who cares? Why would we care about earnings before interest, taxes, depreciation, and amortization? They are loaded with debt, so interest payments are going to be huge. As you'll see on the income statement in a moment, interest payments represent nearly 50% of their total revenue for 2021. To Sunnova's credit, they do have some impressive growth numbers, and I also really appreciate when companies make clear growth guidance for the future. This is always helpful as a shareholder to have precise, written down goals. Let me give you guys a little rundown on how residential solar works in case you're not familiar. The most affordable way to do solar is to just install the panels. During the daytime, generally speaking, you're going to be creating more energy than you're using. During this time, energy flows from your home onto the grid. Then when the sun goes down and you're not generating much solar power and your usage is higher in the evening when people are home watching TV and doing other sorts of things, the energy that you've been giving to the utility company now flows back to your home. This is called net metering. For most people, that electric meter that keeps track of how much energy you're using only goes one direction. But when you have solar installed, you give the power company energy at times, which subtracts from the meter. The exact terms of net metering depend on your state and individual power company. Many customers are disappointed when they find out they'll still be connected to the power company. They also don't like that if the power goes out, they still lose power. The only way to get around this is with batteries and generators. The only problem is these are insanely expensive, and your average cost-conscious customer doesn't get batteries and generators because it means their monthly energy payment is going to be significantly higher than just sticking with the power company. As I'm sure most of you are aware, interest rates are going up, and this poses a huge potential problem for Sunnova. They are loaded with debt, so when debt becomes more expensive to service, it's a problem, and there's only so much cost that can be passed on to customers. I'm also concerned about inflation and what it will do to Sunnova's material costs. Yeah, gas is high right now, so renewable energy sounds smart, but it's going to come down eventually once the Russia thing cools down or the US starts producing oil again. Moving on over to Ticker Terminal. Let's start by looking at their financials and valuation, then I'll give you some additional thoughts on the industry. This is a pretty complicated business, so I'm not going to have enough time to get into every detail, but it's important that we touch on a few things. Some of the numbers we're about to look at are pretty rough, but I want to be fair and acknowledge the fact that this is very much a growth company. If you buy this one, you're choosing it not because of what they're doing today, but what you think they'll be able to accomplish 3, 5, or even 10 years from now. I need to say this to be fair. For starters, we can see some impressive revenue growth year over year. This most recent year, 2021, that just finished, they had 50% revenue growth. This is very impressive. The company has many initiatives coming forward, and there's no reason to believe that this revenue growth is going to slow down anytime soon. From the very top, we can see that in 2021, they posted $241 million in revenue, and selling and general administration expenses came in at just under $200 million. This represents an enormous percentage of overall revenue, and when you add to this some of the other operating expenses, you come to a massive operating loss. As the company scales, operating margins will improve, but for now, these are pretty bad. And as I mentioned a minute ago, the interest expense that this company faces each year is incredibly high due to the large debt load this company has. In 2020, they serviced $154 million in interest payments, and in 2021, $116 million. This represents an enormous percentage of overall revenue, which seriously hurts their profitability. This is a debt-loaded company, and it's just part of their business model, but it certainly hurts their bottom line. And if we scroll all the way to the bottom, we'll see that their net income for 2021 came in at negative $138 million, and the year prior, negative $252 million. Again, keep these numbers in context to their overall revenue. These are painful net losses. I know it's an early days company. Nevertheless, they're going to have serious cash flow problems and are going to have to issue a bunch of new shares or new debt. Next up on the balance sheet, we can see that they have $243 million of cash, and their total current assets come in at $615 million. Solar panels are incredibly expensive, so all of the systems that they have on hand are going to come together to be a very large number. We can see that they've got net property, plant, and equipment of just under $3 billion. This is significantly larger than the overall market cap for this company and is many, many times larger than the total revenue of the company. I realize this is a balance sheet number. I'm just trying to give you some context of its scale. Anyway, let's compare this $615 million current assets number to their total current liabilities, which comes in at $310 million. It looks like they will be able to service their short-term liabilities. That's good. Whenever you see the current assets greater than the current liabilities, solvency in the short term isn't much of a problem. However, we've got to keep in mind that this is a money-losing company. Take a look at this long-term debt, $3.1 billion. I've mentioned their debt a few times already, and this is just part of their overall business model. Scrolling on all the way to the bottom, let's take a look at their net debt, which represents their total debt minus cash and short-term investments. This is $3 billion. We cannot ignore the massive debt load this company has. How is Sunnova going to handle rising interest rates? And in a season of increasing interest rates, you do not want to be a cash flow negative company that needs to take on enormous amounts of additional debt. With that in mind, let's take a look at the cash flow statement, specifically the cash from financing. Here in 2021, they issued $2.2 billion of new debt. They repaid only $981 million. For the most part, they haven't been diluting shareholders too bad. We can see in 2019 and 2020, they did have to do some share issuances, but overall not crazy dilution. However, if the company's business takes a turn for the worse and they're not able to raise money through issuing more debt, it is possible that they'll tap into issuing new shares as a way to finance the company. As a shareholder, this wouldn't make me happy because as a company that's already loaded down with debt, they're now diluting me to raise money. This is kind of a double whammy, and in my opinion, this is not out of the question. As far as their valuation goes, their current price to sales ratio is somewhere between 8 and 9. In 2021, they did $241 million in total revenue with a market cap just over $2 billion. Whew, this is an expensive company. Again, I realize that they are fast growing, but this is also a risky company and you are not getting bargain basement prices. When I was selling solar systems back in 2020 and 2021, it became abundantly clear that price to the customer is priority numero uno. They might say that they're all for renewable energy and going green, but once the customer found out that they'll owe $1 more on average per month for their solar panels, they were out. Cost was everything. Installing solar can be a financially viable option. There's roughly a 25% federal tax credit, and some states offer additional state tax credits for solar installations. When I was selling in North and South Carolina, North Carolina did not offer any state tax credits, whereas South Carolina did. Consequently, the numbers just worked out way better in South Carolina, and it was nearly impossible to sell in North Carolina. We had company meetings multiple times per week, and every single time the repeating topic of discussion was tax credits and what was going to be happening with them in the future. As it stands right now, the only reason why it's financially viable for most homeowners to install solar is because of the tax credits. To me, I do not like the idea that the future fate of my investment is in the hands of the government. If they pull out their tax credits, suddenly my investment no longer makes sense. This makes it an automatic no from me, especially considering the fact that governments do plan on phasing out or fully eliminating these tax credits. And add to all of this the fact that interest rates are rising. This is not a good thing for debt-loaded companies like Sunnova. Ultimately, these costs need to be passed on to customers, and as I mentioned before, my personal experience has showed me that customers are incredibly price sensitive when it comes to solar. This is not a fashion item or a luxury good that people are willing to pay more for in order to have prestige. This is a commodity. This is energy. They want the lowest cost possible, and if sticking with the traditional power company is the better choice, this is what customers will do. I've seen it with my own eyes. I really do think that solar is going to become more popular in years to come, particularly as technology continues to advance, but that does not necessarily make it a great investment. I do not like that I'm putting the fate of my investment in the hands of the government and their willingness to continue with their tax credits at the federal level as well as many states at the state level. This is an enormous exogenous risk. I'm acknowledging the fact that I might be missing other things when it comes to this investment, but I will not be touching Sunnova due to the philosophical reasons that I've described in this video. If you've made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.